Hello, thank you for tuning in to Invest North and Central Jersey Launch Conference. You're about to watch panel number 1, CapStacks, how real estate developers are navigating the current economic climate. Enjoy. And at this moment in time, I'd like to welcome panel 1 panelists to come to the stage. Joining me on stage is Ed Cohen, the principal partner of Prism Capital Partners, David Greek, the managing partner of Greek Development, and Donald Scarinci, the managing partner of Scarinci Hollenbeck. Our panel today is CapStacks, how are developers navigating higher rates, higher costs, and fluctuating demand in a volatile market? Please give my panel a round of applause. Microphone is just behind you and it pops off the next. Sitting is much more comfortable. Welcome, panelists. Thank you so much for being here today. I'm really looking forward to our discussion, and we have some amazing panels to help us to guide us through this conversation. And so I would like to kind of kick off the conversation by setting the stage a little bit. And so looking back, my first question to all of you, and we can go from right to left or left to right, whoever's the most brave. New Jersey is the most densely populated state in the country, in addition to being one of the oldest. And so how does that how does this force unique considerations when it comes to developing real estate in the region?
So I'll take a stab at that. Redevelopment in New Jersey is extremely strong. As you heard Mayor Baraka just discuss the things that are happening in Newark. That kind of thing is happening in a lot of other municipalities as well. So while single family housing is also strong, you know, I think the only downturn as a result of the pandemic has been in the commercial space. You know, but the market does remain strong.
I'll take my stab at it. Is this on?
I think so.
Can you
Try it again?
Closer?
There you go.
Okay. I usually yell, so forget Mike. The denseness of the population here in New Jersey leads to one absolute conclusion. There's always a shortage of housing, good housing.
Yep.
And you have to try to, you know, correlate that with providing economical housing, which is the toughest thing, especially in the environment that we're in right now, where lending rates have quadrupled over the past 1.5 to 2 years. Construction costs have gone up anywhere from 40 to 50% during that same period. And your affordable housing requirements that you are faced with, understandably so, in communities, all of those are pressures on trying to provide economical housing.
Okay.
But the good news is there's an insatiable demand, okay, which is really the best thing that we have going for us at this point in time.
Absolutely. David?
Yeah, I'd say that the density of the New Jersey population is probably our biggest asset here. You know, Greek focuses on industrial development. So I'm speaking from a perspective of warehousing and distribution, especially over the last 20 years as e-commerce has become a bigger portion of the industrial industry. The density of New Jersey's population has driven both the need for industrial space from a labor perspective, because we have a great labor force here in New Jersey and is more available here than it is really anywhere else in the country, but also particularly for e-commerce distributors, our customer base is right here too. That along with our port infrastructure and a lot of other things that make New Jersey a great place to invest for industrial. Density is certainly our biggest asset. It also presents one of the biggest challenges for developing in general. Particularly for industrial, we need relatively large sites to develop. And so there's not a whole lot of that left in New Jersey. And a lot of what we focused on especially over the last 10 years, is more redeveloping older assets instead of finding greenfields, which are increasingly hard to find.
You all touched upon a lot of points that I want to ask in later questions. But one, Ed, you mentioned that the costs have been rising quite a bit, and it's been 3 years since the pandemic that severely affected supply chains. How have you all, I'll throw it out to all of you, seen the supply chain adapt, whether it's storing inventory, price projections, or near more local suppliers? What's different today?
I'll jump in first here. The pandemic was a scary time for everybody, especially the first few months. I think a lot of people learned what supply chain means, what logistics means. It became a household topic of conversation as everyone was having trouble getting the goods they needed to survive. It has been a huge boon to the industrial industry over the last 2 years as the large companies in the economy re-examine how they distribute to consumers, what investment they need to make to modernize their distribution methods, and to kind of desensitize and decouple their distribution methods from potential black swan events like a pandemic. So there's been a huge increase in demand for industrial space driven by those trends. One of the major trends we've seen is switching kind of inventory management systems for our clients to have more slack in their system, so to speak. In other words, have a higher inventory on hand in case something happens at the port or something shuts down in the overall economy. So we think the average warehousing size requirement has grown about 10 to 15% over the last 2 years. And we attribute that mostly to distributors kind of rethinking how much space they need in order to be less sensitive to the day-to-day problems that come up in distribution.
Well,
Okay.
I'll jump in. Nobody with the crystal ball could have forecast what we went through during supply chain. Each and every one of our jobs were affected, but we were still able to, miraculously so, to come in under budget on all of our residential projects that we built during that period of time. One job down in Woodbridge, another one which we're finishing in Denellen, and another one which we're finishing in Hoboken. However, delay.
Yep.
And we never knew we had to be quick on our feet to be able to substitute additional materials for what we had originally planned.
Sure.
And we had to make sure that, our potential suppliers had the inventory, even though many of them have said, I had it. And then you found out it was coming on a boat from Greece or Italy or China or wherever it was. And you really have to be surrounded by excellent financial resources, both in your partnerships and with organizations that can react to this kind of change.
Tyler, do you want to weigh in?
Warehouse.
Sure.
For the last 3 years, and it's logical, right? The paradigm, the pandemic has been a paradigm shift in very many industries across the board. And the need for warehouse space, particularly close to the larger urban areas, the need for warehouse space for the port, the need for warehouse space in near New York, in the Meadowlands. Just look at what they're doing in the Meadowlands. The area's become very industrial, and there's an Amazon warehouse that's just been built. There's a big distribution center on Polito Road that's just been built, and that market has softened from its 3-year high, like at one point getting rents as high as $19 a square feet for warehouse space. But on the same token, projects like one of the projects we're working on in Copper's Coke in Hudson County in the Meadowlands area, that'll be between 2.5 and 4 million square feet of new warehouse space, and that just wets the market.
Yep. Yeah. I was just thinking about the Panama Canal and how backed up it is right now because it can't get the locks working with the drought. I'm wondering, do you think that we've adapted fast enough to hold extra product? No. The quick laugh tells me no.
No, I mean, like I was saying before about our density of population, developing in New Jersey takes time. And it is, our entitlement process here is extensive. It's one of the toughest and most risky entitlement processes of anywhere in the country. So, one of the nice parts about building industrial is the buildings are relatively quick to build. You know, we build an industrial building an average of about 12 to 14 months start to finish once we break ground. But the entitlement period can take much, much longer. On average, it can take us, you know, if we're moving at kind of light speed in New Jersey, about a year. Most of them take about 2 to 3 years, start to finish, to get entitled. So it does take a lot of time in this market to react to changing demand in the market. And that is one of the reasons why we've seen rent growth in industrial be so strong over the last couple of years. We could not catch up with the amount of demand we were seeing.
Yeah.
You know, I give the analogy, and this will probably be covered by a later panel, but I have to insert it. It used to take, when you were thinking of building a project, after you zeroed in on something, you figure within 2 years it'll be up, it'll be done, and you'll be collecting rent. That's now 4 years, best case,
Wow.
till you see $1 on your investment. Keep that in mind. So development is not for the weak of heart.
Yes.
That's the point that I'm trying to make here. But you have to have those resources, and you have to have that staying power and tremendous financial partners in your projects.
Well, speaking of resources, today's rate investment is the highest it's been in over a decade. When it comes to development, what are the factors that you're focused on to ensure that projects pencil out? And how are cap stacks different today? David, do you want to start or?
Sure. The cost of debt directly impacts the value of real estate. I think that, you know, they are directly correlated. The higher the cost of debt, the higher the cap rates, and thus the lower the value of the real estate. When we're talking about a market like New Jersey, though, that is so dense and is hard to break into from a real estate investment perspective, especially the industrial space, where, you know, as you've heard, there's been a tremendous amount of demand, not only from tenants, but also from investors over the last 5 years. You know, what we've seen is the cost of debt has certainly impacted the value, but there is willingness from investors to say, I believe in New Jersey, I believe in industrial in New Jersey so much that I'm willing to take some negative leverage for a year or two in order to get a foothold in this market. And basically what that means is people are collecting a cash on cash yield on their investment that's lower than the amount of debt service they're paying the bank.
Sure.
And they're willing to take that. It is a risky bet they're taking, but they're betting that this market will stay strong, that rent growth will continue, and that, you know, they will continue to keep their spaces leased. So elsewhere in the country, I think the capital markets have had a much greater impact on value than here in New Jersey, because there is still a strong belief in the demand dynamics here and a lot of investor demand to be here. That said, you know, our capital stacks today are more conservative than they were 2 years ago. We're investing a greater amount of equity into the projects and using lower amounts of leverage to build them, simply because it's much more expensive to use that leverage.
Sure. Ed?
Picking up on David's comment, we've always had the philosophy at Prism, you know, through our commercial developments, our residential developments, never to put too much leverage on real estate, because we always underwrite both the positive and the negative, you know, market shift. I'm old enough with the gray hair, as you can see, to have been through about 5 of these. This is probably one of the worst ones that I've been through,
Wow.
because it was complicated, not only by the price of debt, but by supply chain. I mean, I have not experienced anything as traumatic, let's use it that way,
Yeah.
you know, throughout my entire real estate career. And I've been through some really bad cycles. So, you know, not only is the financial markets very difficult to deal with, but all of the lenders now are looking for more and more guarantees,
Sure.
personal guarantees on the debt that you seek to get. So unless you have a very strong balance sheet, you're going to find a hard time in even borrowing money at these costs.
Donald, I see you nodding.
This is a very difficult, that's a really good point. This is a very difficult time for borrowing. And, but like in every market cycle, there's ways to make money and there's ways to.
We wouldn't be here if it wasn't.
That's right. None of us would be here if there wasn't. So, and some of those ways, and I want to approach this problem from the approval point of view, right? Which, you just saw many municipalities struggle with, collecting taxes, right? That this has been a major crisis in a lot of municipalities because for some period of time, until recently, we've had a moratorium on evictions for non-payment of rent, right? That's now over. And the foreclosure and everything else has the docket for evictions and foreclosures is years, as much as they're trying to clear it quickly. But the important point here is to educate the elected officials and the planning officials and the people who do in the approval process to the fact that it's not the same market as it was before the pandemic, where rates have been relatively flat for years. So to think that you can do, a 20% affordable housing, set aside, to think that on top of that, you can do things like Jersey City just did by passing an ordinance that assesses a 4% surcharge to every developer to create a pool of money for lawyers to sue the developers. That is going to cause a stall in development. But the workaround is to think of it from the elected officials' point of view, right? And it was very insightful what Mayor Baraka had to say. It's about the opportunity in this market is a different opportunity, right? It's an opportunity to provide that housing to keep people in New Jersey, and most towns, especially urban areas, will work with you.
Excellent. Ed, I'd like to throw a question at you. In your interview this year with our report, you discussed the ongoing fight to quality. Having said that, what specifically are the qualities that people are looking for, whether that be in the residential or commercial side of things? And what are the factors that build high quality in today's market? And what does that mean to develop those kind of projects?
Believe it or not, that's kind of an easy answer.
Good.
In this environment, with a very strong labor market, low unemployment, it has become essential in the commercial end of things to provide a mixed use environment. The old adage, live, work, play. The New Jersey office market in general is horrible at this point in time. Would they say the vacancy rate is 20%, 22%? It's probably 35% when you look at all of the phantom space. Phantom space is space that's under lease by corporations and companies that is not occupied, all right? Getting people back to work is very difficult. But if you provide the right environment where labor is attracted to being able to go out for a cocktail at the end of the day, go out for dinner, mingle with other people. Probably our On3 development, once completed, which we're, let's say, halfway through right now, is the perfect example where you're going to be providing a mix of commercial, residential, hospitality, research and development, education. Hard. We have 116 acres to deal with, so it's a little easier. We have the space to do it. For example, the strongest two markets, other than what I think On3 will be, since we leased 1.5 million feet of existing product there, is the Morristown market and the Metro Park market. Those are the two strongest markets in the state. There you have rents on new buildings being built of over $50 a foot net. Okay, you're at a $60 a foot package minimum in the new buildings in Morristown. Metro Park slightly below that. On3 slightly below that, because we don't have brand new product coming out. While the rest of the market is lucky to get $20 to $25 a square foot if they can find the tenant. So if you are providing that mix of uses, you have a very good chance. On the residential end, location, location, location. The old adage in real estate, if you have the right location, you're going to rent your product even at rents that are higher than they are throughout other communities. Again, getting back to the density issue.
Yes. Well, we're coming close to the end of the panel. I want to toss one more question to David and then one more for the group. Perhaps more than other asset classes, industrial properties rely on local infrastructures, ports, roads, railways. Have there been downstream impacts from the New Jersey, New York's region infrastructure investments and growth? And will that influence demand for industrial properties across the state?
Absolutely. Outside of our population and the great people that live in New Jersey, our infrastructure is the most important aspect of the state from a distribution and logistics perspective. We have the Port of Newark here and the Port of New York. It is, for this year, the largest and most important port in the country. We kind of trade spots with California every other year. But that is that is really the beating heart of the New Jersey economy. And without that port, this market would look very, very different. In fact, the whole country would look very, very different in terms of the amount of exports and imports that we do. So the port is very important, but outside of that, New Jersey has great infrastructure and continues to invest in great roadway infrastructure through the turnpike and all the other great distribution corridors we have through the state. Coming from a selfish perspective, we can always use more infrastructure investment. It's one of the most efficient ways the government can spend their money and get a return on their money is to invest in their infrastructure. New Jersey is always going to be an important port destination for the United States. We have seen, one interesting trend we've seen through COVID is port diversification for importers that are coming to the US. So, for example, the Chinese importers that were primarily coming through the port of Long Branch in California have diversified to come to send some of their product to Vancouver and even cross through the Panama Canal and drop off product in the East Coast ports, whether that's Savannah or Newark or any of the other East Coast ports. So that has really benefited all port infrastructure all across the country. But, New Jersey having the largest port, it's definitely benefited us the most.
Great. And I forgot to mention that Donald stepped in last minute. We had a last minute change. And so we've had a brief conversation before this all got going. So thank you again for stepping in last minute.
The first names are the same.
So I'll start with you for our last question to round everything the discussion out. Considering the stresses facing certain real estate asset classes and the industry overall, is there a possibility that we're going to see developers pursue increasingly diverse portfolios across a wide range of assets?
Of course, it's already been happening, and there's a lot of opportunity in repurposing existing. You're seeing in New York City more so than New Jersey, but it'll come to New Jersey. In New York City, there's significant repurposing of office buildings into housing.
Sure.
And you're seeing that a little less so in New Jersey right now. But you are in New Jersey, we are repurposing malls, the Monmouth Mall.
Sure.
It was a prototype for what's going on nationally, converting these malls into new communities, building housing and bringing in local businesses instead of chains. So that's working. And I have to point out that the idea for that, I had the pleasure of working with Jared Kushner before he entered his political phase. But Jared was really an advocate of that for Kushner and for the Kushner companies, and they've done a lot nationally on mall repurposing, and the original Monmouth Mall project was really to his credit. So he gets a lot of blame for things, but he gets some credit too. And and now office buildings. Office buildings in New Jersey for some reason. People are hanging on to the rents as much as they can. It doesn't seem to be changing though.
The New Jersey office market has been in trouble since the 80s when the inventory doubled. It went from a 70 million square foot market to 160 million square foot market. All right. My opinion on panels that I've served for the last 10, 15 years has been the best thing that could ever happen to the office market in New Jersey was getting rid of a third of the product, because buildings were built, in places that they never should have been built. And the quality of those assets in many cases was very inferior.
Mm.
Flight to quality, getting back to that topic, is always essential. People will pay a great amount of money to be in the right product. You have to focus your sights on which markets those are. And again, I'm going back to what I said before, you have to have the diversity and other types of lifestyle commitments. So, again, for residential, we're probably one of the largest redevelopers in the state.
Sure.
We converted the 400,000 square foot General Electric factory building on the Garden State Parkway into 360 units. Then we converted the Thomas Edison 400,000 foot building into 335 units. And then now we're finishing up converting the Wonderlost Bakery building into condominiums. But the conversion from industrial to residential is much easier than the conversion from office to residential.
Okay.
It doesn't have the plumbing infrastructure that's needed. So very expensive. It's sometimes cheaper to knock down and start over than reconstruct.
Absolutely. And that's where guys like us step in. Oftentimes especially in New Jersey, for that late 70s, early 80s vintage office building, there is no viable redevelopment plan other than to start from scratch. And often, in order to replace the ratables that the town was getting out of those properties, the best option for most towns is to convert a old dysfunctional office building into a very needed and in-demand industrial space. And there's a lot of education that we've been doing with local officials over the last 10 years to show them that the jobs that we're creating in their townships through these projects are great jobs. They're not the jobs that were given in warehouses 15, 20 years ago. These are high paying, in some cases, very specialized jobs. And New Jersey has the labor that's needed and the talent that's needed to staff these facilities. So there's a lot of negative press out there about warehousing, and it is really one of the best tools that our local municipalities can use to preserve their tax base and keep their people employed.
Well, thank you again to my panel. Please give them a round of applause. It's a wonderful discussion. Thank you very, very much.